The one thing I wanted to talk about immediately, Arm, was OSFI's stress test. They're saying it's over now. It ends today. That's what they're saying. What does that mean?
Yeah, so as of now, or as of today, as of yesterday, when an individual has their mortgage coming up for renewal with a bank, the problem right now is lots of people can't even qualify for their own mortgages
Well, that's
because
yeah.
because they got their mortgage maybe at 2.5%, and now with the rates being at 4, 5, 6, depending on your approval, how you qualify, they can't qualify for their own mortgage because the interest rates are so large. Plus, on top of that, they still have to stress test. So let's say someone wants to move their mortgage to another bank. So let's say someone's with TD Bank and they want to go to Royal Bank. Royal Bank.
Which you couldn't do before, correct? You couldn't.
No, no, no. So when your mortgage is up for renewal, traditionally you would just work the market, right? You'd be like, okay, well, hey, well, RBC, if you're not going to give me this good renewal rate, I'm going to go to TD and I'm going to
Ah,
move that mortgage there, and TD would approve. The problem is individuals are having a hard time getting approved for their mortgages, so they can't move it, so they're stuck. So whatever their lender gives them, they have to take. So, rule of thumb, when your mortgage is up for renewal, the bank will just renew you. As long as you've made your mortgage payments on time, the bank will just renew you. They're not doing credit checks, they're not doing any income verification, they're not even calling and giving you like a, hey, let's just chat, what's going on? Typically, it's just, here's your interest rate options. What do you want to do for the next, for your next term?
hmm.
So some people will just sign that paper and send it back, which is never recommended. Others would go and shop it around. But no one's been able to shop it around because this rates are high, the stress test is high, so they can't even qualify for their own mortgage. So they have to take whatever offer their bank is giving them.
Oh, and maybe just explain quickly a stress test quickly. What people, if they don't understand what that is.
So a stress test is if you have a $500,000 mortgage and you have a mortgage payment that is set at 4.5%. That's what you want. That's what your new mortgage rate's going to be. You have to actually qualify for that for the mortgage again as if your interest rate's 6.5%.
And so that's the stress. They want to stress you in case
That's a
rates go
stress.
up, right? You can handle that stress, correct? Is that why they're
Exactly.
saying? Okay.
Now if a bank is offering a mortgage renewal, that means the mortgage payments are being handled just fine. You know what I mean? A bank's not going to offer a mortgage renewal if the payments aren't being
Right.
made. And so what OSFI's done is they've done one of the best moves they've done in a very long time is a Canadians, if your mortgage is up for renewal, you now have more choice to shop your mortgage around. You can go and apply with another bank, and we're not going to stress test you because
Mm.
you've already shown that you can make your mortgage payments no problem because you're already getting a renewal offer from your current lending institution. So you can go and shop your mortgage around, and we're not going to stress test you. You already shown proof
It
that you can.
sounds like to me too. You could almost say that's almost like the second credit check that's been sort of taken away,
Yeah, essentially.
right? Because people still have to get a credit check if they're getting a mortgage again. Is that correct? If they're
Yeah,
renewing,
so no matter what, if you're moving a mortgage to another institution, you have to do the whole thing as if when you got your mortgage with the other bank. So that's still
they're
not.
just taking off the stress
You have
test
to do
portion.
credit check, you have to do income verification, you've got to do the whole thing. But here's the thing: is it might take you 4 or 5 hours for the whole process. Phone
Mm-hmm.
calls, paperwork, all that, depending how organized you are. You let your bank or your broker do the rest of the work for you, and you're done. You could save thousands of dollars for a few hours of work.
Mm-hmm. I'm going to put you on the spot too a little bit. OSFI.
Yeah.
Do you know the what that acronym stands for?
Office of Superintendent of Financial Institutions. So they regulate the rules. Now the government of Canada can come up with rules. Austin can come up with rules. It's kind of a weird relationship,
Yeah.
but they are the regulators to make sure that mortgages are underwritten and banks are following guidelines, and we're not getting into back in the 2008
Well,
crash.
and I think so. Back to the intention for them doing this, I see. Okay, the problem could occur like, okay, Like, how is this a bad thing for the end consumer? I mean, I see the solution. They're trying to spur the housing market a little bit now, right? Because this should help, make, if someone wanted to move as well, right? Would this help?
No, totally different. Totally different. So if you are getting a brand new mortgage, then that's totally different. So the stress test does not apply. If your mortgage is $500,000 and you're moving it from one bank to another bank, then the stress test does not apply. If you want to make your
Mhm.
mortgage $550,000 because you want to consolidate debt or you want to take out money for whatever purposes, you will now need to stress test.
I thank you for that.
This new regulation is only if you're moving your mortgage over dollar for dollar. Now there'll be a little bit of wiggle room. They'll be like, oh, we'll allow you up to $3,000 for any cost to move your mortgage, all that stuff. But it's going to be a dollar for dollar, what they call switch. So you're just moving your mortgage over for better mortgage terms or a better rate.
Now, do you think this is the right solution or one of the right solutions to help the end consumer?
Of course it is, because the problem is, you can't shop. I mean, in the States, you get your mortgage, you're in that for 30 years,
Hmm.
set it and forget it. In Canada, you have an opportunity, depending on what term you choose, 3, 4, 5, 10 years. Whenever your mortgage term is up, you now have a new opportunity to renegotiate your mortgage. And we have seen banks, have the lowest rate at the time of renewal for a borrower, and they have been stuck at that bank. And the bank every bank has the best rate on any given day of the week. There's
Hmm.
not like, oh, this bank always has the best rates. It's not the way it works. It's always different. And then also the other problem is the banks also have different renewal guidelines.
Hmm.
So if I think of one of the biggest banks, they set their interest rates 15 days prior to your renewal. Okay. So
Interesting.
15 days prior so if we're going into an environment where interest rates are going up, okay, a borrower hasn't been able to protect themselves, because typically 4 months ahead you can shop around and start getting your mortgage rates. But if you have to wait, if you have to
Hmm.
wait for 15 days prior to renewal, whereas you could have taken action four
Right.
months ahead of time, you could have saved a significant amount of maybe your rates move by half, 0.75% in that time. Very
Right.
possible.
Yeah.
So,
Especially if you want to lock in and you're not, going to write variable.
exactly,
Right.
100%. And I'm definitely talking more on the fixed end, but obviously variable as well because that discount can easily change by 0.5% between now and 4 months. It can go higher or lower as well. So,
Well,
so yeah,
on a
basically,
sort of a
basically
side,
this is.
go ahead.
Go ahead. I
I
was
was
just
just
gonna
going to
say
say on the
basically
side,
this. I was just.
this is going to go off topic, but it makes me think. So, okay, this helps people not have to do that stress test. That's incredible. But now also, it sort of leads me to think. It's like, okay, that's just one thing less. It's like, what if someone doesn't own and they've been making their rent payments, and let's just say they've been outstanding, making $4,000, $5,000 a month rent payments, right? But they still can't qualify for a mortgage, but they can make these rent payments all the time. So that's just another thing I hope they sort of change where that maybe if you're showing that you're making really good rent payments and that helps with getting that new mortgage, that helps. I mean, I see where Ostvi's going here with the stress. It's good for people who have a mortgage already, right? But what about someone coming in? Can they help that individual who's been paying rent consistently? Maybe they got a little bit of bad credit, but they just don't have much as assets and they don't have much as, they have a little bit of a down payment, but don't you think that someone who's been paying rent solidly, consistently, should have an effect if they can get a mortgage?
Well, I mean, typically that the characteristic of that client, that borrower, is characterized by the bank through their credit bureau, right? Because typically, if somebody makes their bill payments on time, it's going to be reflected on the credit bureau. So that's the importance of keeping good credits. Whether somebody has a, $1,500 rent payment a month, or they're renting a room for $500, or whether they're renting a house for $6,000 a month, the amount that they're paying and the fact that they pay it on time. Um,
Well, no, I'm gonna argue that a little bit because you said 500 to 15, but if someone is showing they can afford a $4,500 rent payment per month, But the mortgage payment, okay, the mortgage payment, and I get it because, the mortgage payment.
Oh, but the problem with that ideology is because somebody is choosing to make a $4,500 rent payment, whereas somebody might be choosing to make a $1,500 rent payment, right?
Mhm.
Because they're saving more. So the amount that somebody's making in rent, I know what you're saying. It allows the bank to see, well, hey, this person can handle this payment.
Yeah.
If the mortgage payments 4 grand and you add strata fees and property taxes and now they're at 4,500 a month in carrying costs, then yeah, it's equal.
But then I
What you mean.
understand, then becomes all a risk factor, right? If something happens, anything, and this is where that stress test came in, right? If all of a sudden interest rates went up, right? And then there's,
Yeah.
oh, you can't handle it. Just because you were handling those rent payments doesn't mean you can handle them more. But you can't tell me you haven't seen people who could easily afford a mortgage, make the payments, but couldn't get the mortgage,
Oh yeah, 100, yeah, yeah. We
right?
see that often because the problem is the problem in Canada, Vancouver market specifically, is the rent payments are too high and it's hard for people to actually put money aside.
Well, now the rent payments are so high because interest rates have gone up. The landlords have had to pay more for their mortgage, so they generally would say, "Hey, the only increases of what 4% a year," and I think that's even changing where you cannot. And it's fair. You can't gouge the renter and just say, okay, now you got to pay an extra 10, 15% just because the homeowner mortgage went up, right? But if a new renter comes in and then you can charge more, but then you're right, this is where rent prices just started to escalate so much to where a one bedroom downtown to rent is close to $3,000 per month. So how does
Yeah.
anybody have kids?
Yeah.
Does anybody, this it's just shocking.